The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alistair MacLeod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alistair MacLeod on behalf of Gold Money, and with me on the line from Prague, I have Vice Governor Hampl of the Czech National Bank. Welcome to the podcast, Vice Governor Hampl.
Hello, good afternoon.
The Czech Republic has always intrigued me because when my father was alive, he told me that before the Second World War, the Germans regarded the best engineers in the world as being the Czechoslovakians. Now, I don't know whether it was the Czechs or the Slovakians.
Rather Czechs, I believe.
But what fascinates me is that in those days, Škoda had a fantastic name, for well-built and well-engineered cars, and then of course they were destroyed effectively as a brand through the communist era, and is now rebuilt and wins rallies and everything. So that seems to me to almost parallel perhaps what's been going on in the Czech Republic over the last 100 years.
This is absolutely true. You know, the Czech Republic has a very long tradition in manufacturing. Actually, the current Czech lands were the most developed part of the former Austro-Hungarian monarchy. So there is really a very long tradition in all these areas. So don't be surprised to see so many products with the label made in the Czech Republic across the Europe or the world. But on the other hand, the history took its toll on the Czech Republic to some extent. So you know that we had two occupations within one century. We've got a history of one nation, the Germans, being expelled from our country, which also had it has got a long-lasting impact on us, like the communist history of the 40 years prior to 1989. So it is a very dramatic history, but still, I believe that this tradition is here. And if you can compare the Czechs to other nations in Europe, it still seems to me that this is the nation of small savers and manufacturers, so very close to the habits of Germans or Austrians. So
that's very, very interesting, because that was one of the things I just wondered what you attributed the success to. And mentioning savers, I mean, I think what you're saying is that the Czech economy is a savings-driven economy rather than a consumption-driven economy in the American or British sense. Yeah,
absolutely. You know, again, the Czechs are typical small savers. You know, they are very conservative. They do not like acquiring too much of a debt. In this behavior, it is a behavior that is very much typical for the Czech lands for many I would say hundreds of years. Look at Bavaria and Austria, and you will find the habits that you will also find in our country. So it has got one big advantage for central bankers when you've got households that are not overly indebted. When you've got households who are rather not net creditors and not net borrowers, it is much easier to sustain low inflationary environment, because the general public, the households want you, the central bank, to keep very low inflation. This is very similar to the behavior you would find in many surrounding countries like Austria and Germany.
Yeah, no, that's fascinating. It confirms what I mean. If I can float this one across you, it confirms, if you like, an Austrian economic I mean, in the Austrian School of Economic understanding, if you like, of price formation and the role of savings in an economy. So
look, for instance, into history prior to the Second World War. We had one big exception from macroeconomic point of view. Looking at the Czechoslovakia between 1918 and 1938, you will find that we were the only country in the region experiencing not inflation, but rather deflation. We had intentionally created a deflationary policy in an environment that was completely in favor of hyperinflation. So this is also one sign that is going to tell you something about the behavior not only of the general public and households, but also policymakers here.
No, that's fascinating. That really is interesting. I mean, what you're saying is that, well, in those days, presumably it was Czechoslovakia, but the whole of the trend on the continent for weak money as a means of either concealing, if you like, economic problems, or indeed paying for government spending. That is extremely interesting. Now,
well, sorry.
We're now in a situation, I think, where you've gone through the communist phase when any of those wonderful sort of tendencies towards save as opposed to consume, so on and so forth, were all destroyed, if you like, by, the command economy of a communist structure. Yet you have still emerged from that, and you are pursuing free market policies almost as if nothing had happened. I think that's quite remarkable, isn't it?
Well, something has happened. Something has happened as the communists have destroyed a lot of wealth.
Indeed.
So what is happening? What we've been observing since 1989 is the economy of hungry agents who want to become wealthy again. So this is something that drives this economy forward. But on the other hand, you have got a lot of tendencies internally and of course externally that tend to slow down this process of we call it in economics of catching up. So we are still catching up. We are getting wealthier and wealthier, but it is not as easy and as fast as of the course of let's say 3, 4, 5 years after the transition began.
Right. So, I mean, does this, if you like, the sort of free market approach, is this supported by government having a fairly low role in the economy, or to what extent does government participate in the economy? I mean, is it a major part of GDP or smaller than?
Well, I think that one important thing that helped this economy to get some boost, so to speak, was a relatively rapid transition process. It was not a step-by-step approach, but rather a rapid transition to the market economy, meaning also that we had a very rapid privatization, for instance, compared to other countries in the region, and it helped to create something like a solid basis of the economy. But on the other hand, I have to admit that this solid basis cannot last forever, and you would need more, and you would need something like a new impetus to keep this solid basis from disappearing. And it seems to me that we are losing steam,
yeah.
so to speak. So yes, you are right. The process here was rather more rapid than in other countries, and it helped this economy. But I'm not sure whether we are on this still on this rapid track.
Well, of course, I suppose there is a sort of interplay here, isn't there, in the sense that, when you have any democracy, there are always pressures for government to spend more money, for government to interfere. But, your major trading partners are all in the eurozone, and it seems to me that that's a pretty clear lesson of what can go wrong if government does get too involved. How does that affecting the domestic political scene? I mean, is that making people sort of step back from the idea that the government has got the answer to everything? Are they, does that reinforce, if you like, the savings culture? Is probably the best way to describe it.
Very, very much at the current juncture. If you look at the GDP figures in the Czech economy for the last, let's say, couple of quarters, you would see that we've got a very, very weak domestic demand. And this is exactly because of what you described. All the economic agents are so nervous about the external environment and also about the potential potential of this economy that they are saving like crazy. They are saving more than understanded circumstances. Being nervous about what is going to happen in the eurozone, in Germany, in the whole European Union, in our economy. Also, they are, of course, they are also being frustrated by the fact that the VAT is going up as one part of the consolidation effort of the government. So, generally speaking, yes, cautious small savers are saving and not spending, and this is causing like a mild recession in our economy. And this is one important factor. Small savers tend to be conservative, and their sentiment tends to deteriorate very often much faster than the fundament of the economy. And this is exactly our situation. So the sentiment coming from outside is pushing small savers to save more, if I may say like this.
Yeah, no, that makes an awful lot of sense. And of course, the price effect is effectively to lower the level of prices at which economic activity sort of gears up again. And I certainly here in the UK, if you like, tempts the central bank, the Bank of England, and also the government to try and re-stimulate demand, which, of course, because it's at the wrong price, is very, very hard to achieve. Presumably, as a central bank, you must be under some pressure in that direction.
And we are not. This is one of the, let's say, good news for central bankers in the countries like, I would say, Germany, Czech Republic, Austria. The general public doesn't want the central bank to start printing money to solve the problems. They know that eventually inflation hurts their own savings. So this is why there is such a huge difference in the arguments and in the debate among, let's say, Bundesbank and the Bank of England. They are serving different kind of audiences and different kind of household behavior, and it also creates a different environment for central bankers. So I would rather say that we are happy central bankers, as the general public doesn't want the central bank to solve the problem through the printing press.
Well, I must say, as a supporter of sound money, I think that's it's very, very nice to hear a central banker say that. I think that's tremendous. I must say, you do at least have the flexibility of not being in the eurozone, unlike Austria and Germany. And I think I'm right in saying that the last Social Democrat administration wanted to join the euro, but that's been dropped by the current government. Do you ever see a time when you might join the euro, or is that just been shelved forever?
Well, frankly speaking, the question, at least at the current juncture right now, is so unimportant for me that I do not want even to spend some time debating the timing of the potential entrance into the eurozone. For me, it is not a question of life and death, and it never was. and look at the polls, and you will see that something like 80% of the public wouldn't like to see the Czech Republic entering the eurozone. So it is out of the question for the moment. And my private assumption, and it is really my private assumption, is that I cannot imagine the Czech Republic entering this particular eurozone ever in the many years to come. So I think it is not, the question is really not on the table.
I think that's completely understandable. But turning to the banking system, how exposed are the Czech banks to systemic risk from Greece, Spain, Italy, and Portugal? I mean, the countries which are having runs on their banks, effectively. Our banking sector is rather. Look, we tend to speak quite often in the European debates about the refragmentation or fragmentation of the banking sectors in the EU, in various countries within the EU. But frankly, one of the advantages of our banking sector to others was the fact that our banking sector was very much fragmented, So domestic savings, domestic savers financing their local banks in local currency, and these local banks then transforming these local deposits into local loans in the local currency. So very much a fragmented system. And it meant that this system is very in a very good shape, in a very good condition compared to many countries and many banking sectors to the west and to the east. So we've got rather different problem. Our local Czech banks are typical cash cows for the mother companies, mother banking groups abroad. They are based basically in the eurozone. So we are in a different position. Very good and well capitalized and liquidity rich daughter companies, daughter banks within the Czech Republic are financing their not so healthy mothers abroad, and we are very much nervous about this, the potential consequences, and of course about potential consequences of the ideas like banking union, which might mean that this stability, this local stability, might be in danger. So that's rather the our source of concern. Yeah, I can understand that. So if I can put it up and put it another way, I mean, the Czech banks, the ones which you regulate. I mean, presumably the central bank is the regulator for the banks. Yeah. They have domestic deposits. Their exposure to foreign currencies tends to be on a trade financing basis rather than any other basis, any other more permanent basis. And so actually, as a regulator, even though a Czech bank may be owned by a foreign bank, you can actually control the situation in terms of ultimate risk back to the currency.
Yeah, this is absolutely correct. Yes, it
Great.
Is so. And this is one of the reasons why, for instance, our banks have got in the average Tier 1 capital adequacy around 15%. So it's much higher than the Basel III rules expect for the whole EU in the years to come. So really, the loans being provided to the economy are more than covered by domestic deposits, which is a quite unique situation in the EU. Typically, you've got a loan to deposit ratio above 100%. In our country, it's below 100%. So the domestic deposits of local savers are covering the local loans are more than covering the local loans provided by the Czech bank. So
right.
really a very comfortable situation, especially in the times of stress.
So that sounds wonderful. It sounds like you can actually take the odd holiday, whereas I think some of your fellow central bankers must be very envious.
Especially to the Czech banks, you can come and you will see something like a very peaceful environment. Really.
Not queues around the block.
Yeah.
Turning slightly to your policy on gold, I think the official statistics, or at least the IMF statistics, show that you've got about 12.5 tons of gold. Is this something you expect to add to or dispose? I mean, how do you view the central bank's gold as an asset?
Well, look. Gold is just one of the assets the central bank might have, and for us, gold has got one disadvantage or two disadvantages. First, it doesn't bear any interest. Second, its volatility at times is much bigger than the volatility of other assets, especially bonds. So for us, it's one of the assets, but definitely not the most preferred asset to be on the balance sheet of the central bank. I know that this might sound silly, as everybody right now is acquiring gold and buying gold in big amounts, but looking at the gold from a very, very long perspective, it is still for us a bit more risky asset than other potential classes of assets. So
that's well, you emphasise the two negatives, no interest and volatility, but you don't emphasise, if you like, one of the positives, which, well, I can think of two positives. I'd be interested in your thoughts on it. One is that all the other assets that you might have are denominated in government money, paper money, which is inherently unstable. And secondly, if you look at bonds, I mean, you've got quite a potential price risk, because most of the foreign bonds that you would hold, would be reflecting manufactured low interest rates, which at some stage have got to come to an end. Would you not feel that there is therefore more risk in bonds and that sort, and other currencies perhaps?
Well, you are absolutely right, and I understand that the current situation raises these kind of questions. Yes, but still, one of the reasons why we've got foreign exchange reserves is that you've got reserves that can be used for fighting with some unexpected swings in the exchange rate one way or another. And seen from this perspective, you need the foreign currency rather than gold to achieve this goal. So look at the FX reserves, which are the biggest part of the asset side of our balance sheet. Also from this perspective, from the perspective of a very small and open economy, and you will have a different perspective, and you will look at all these assets in foreign currencies, be it the euro or the dollar, from a different perspective. But just to confirm your view, I must say that we started diversifying the portfolio of the assets we hold very much over the course of the last 2 or 3 years. And for instance, we own reserves in the currencies that are for many quite unique, from the Australian dollar to the Swedish koruna or the Canadian dollar. Not a typical. These are not typical reserve currencies for the central banks of our size. But confirming your view, also we had to start thinking about our portfolios and the risks of of our portfolio stemming from the risk that you described. So yes.
Oh, right. Well, Vice Governor Hampl, I'm very grateful that you came on to this podcast, and I'm sure it will be listened to with great interest by our listeners. So can I say thank you very much indeed?
Thank you very much for your kind invitation to this interview.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.